Welcome to the Investment Process Channel. I am C3 Christopher Campbell, where we learn how to create generational wealth by minimizing risk. Today, we're going to talk about a great topic, trusting your process. Of course, it's the Investment Process Channel. Everything that we talk about on here is about your process. So, um, let's get into it. So, okay, today we're going to talk about this trade I did. It was earlier this week, and trusting your process and understanding um, when you set up a process for yourself for your trades, you have to trust that process and trust that it's gonna work out the way you want it to. I want to show you how my original plan was set up. It was set up perfectly. It did not necessarily go the way I wanted it to. Um, However, I understood that this was going to be a swing trade and not a day trade. And if you're not familiar, uh, look back at one of my earlier training sessions where I talk about swing trading versus day trading. I am a full time professional, so I do trade as well as work full time. So this to let you know this can be done. This can be done, and so this is why it's very important to have good processes put in place to minimize your risk and get the maximum results. So let's get into it. So so what we're going to do here is look at how this setup was like the best thing running, right? So with that being said, we gonna take a look at this green box here. That's where the actual trade started and originated, and then I'm gonna let you see how it played out for the rest of the week. Okay, so we started a week. As you can see, this is like the middle of the week when I set it up. So we started out the week very bullish, and um, we're still bullish for the month. However, you see the week ended very bearish, right? From where it started, right? We ended up in a bearish week. So I sat back and I took a look at some imbalances in the market at that point in time. 1, 2, 3, 4, 5 days. So we had this engulfing bullish candle right here. Left some imbalance right down here. So you see, I set up my daily. I have orange lines for my daily. I set up my daily uh, support or resistance. Well, I took a short, so I was selling because I saw it traded between our ranges here. We'll talk about in a second. However, I saw there was an imbalance because of the engulfing candle on Monday. So once I saw the engulfing candle, I looked back and took a look at the imbalance and noted that it will probably come back down there. So again, understanding the process of I'm looking at a daily candle. So it may not turn around in a day. It may take 2, 3 days. So again, I'm swing trading. It may come back next week. Who knows? However, you have to trust that process. Um, so again, I looked at it. I saw there was some imbalance down here. The next day, you see it came back close to cleaning up that imbalance, but not quite. So it was still, it was still playing in this range here between this daily candle and this 4 hour candle up here. So let's take a look at the 4 hour candles. So again, we're looking in this green box. This is the snapshot that I had at the time when I was taking on the trade, and again, looking here at this imbalance right here for the daily. If you guys can see my right here at the bottom part of this green square on the daily, you can see the imbalance here still has not been cleared up. It the uh, it came back down into this area with a bearish candle, but it still had pretty much. Let me see. Let me click here. Still had pretty much all of this to clear up, even with that bearish candle. So as you can see, like the next day it started here and like shot all the way up. So again, the market creating more and more imbalances. So perfect time to take advantage of it. So at that time, I looked at the overall position of the market, and then on Wednesday, I decided to take a position. So here it is. I'm looking more on the let me scroll this down and zoom out a little bit. Looking more on the hourly, looking at, okay, price momentum is between these two ranges, 169.413 and 167.917. And as you can see, the price is fluctuating between that for several days. We're looking at the 17th, 18th, 19th. Price is not, and actually the 20th if we keep going. However, at the time I'm looking at pretty much up to the 19th. Hey, price is only moving between 169.413 and 167.917. So at that time, I'm like, okay, the imbalance has not been cleared up. It's moving in between these two price points right now. So there's opportunity to get. Let's take a look here. There's opportunity to get between these two price points about 150 pips. You know, some people want more, some people want less. Depends on your risk reward. 150 pips typically right now, and this is the reason why you have to trust your process. Typically right now, my for trading British pound yen, 50 pips is my risk limit. So depending on what my investment size is, my 50 pips will fluctuate between my entry level, right? So what portion of a lot did I take on, right? So we always managing risk. So with that being said, I took a position right here, 168.950, and that's right here. So that left for my 50 pips. That left from here all the way down to here. That left for what? 3-to-1 risk reward, right? So you'll see here at 168.750, I started my trade with, oh, my apologies. See, my max is 50. I started my trade with 20 pips risk. So going to 20 pips risk, and then I come all the way down here. We're looking at 5-to-1. That was a 5-to-1 risk reward. So you see the difference. So that was a 5-to-1. I thought it was 3-to-1, but it's 5-to-1. I only took a 20 pip risk. So again, my max is 50. 50 would have been all the way back up here, 169.413. So anyway, that was my original trade. And as you see, 168.750. Once I got in here and it did its thing, and went all the way down. Like I said, it was tipping on 167.917. I went on ahead and moved my stop to protect my trade here to 168.750. Now, as you see in that snapshot, protecting my trade, and like, oh, it happened, right? So, boom. If you look here, I told you I put 20 pips risk, 20 pip risk reward, right? So I'm a 1-to-1. I'm gonna break even at that point. So great trade for me. Did it fully go the way I wanted it to? Absolutely not. However, at that point in time, I got my 20 pips. I risked 20 pips. I got 20 pips back. There's no risk at that point, right? So once it moves all the way down, and you see right here, it's still playing around. It's like, oh, I don't know what I'm gonna do. It's still on this trading between this range. Every time it hits this range, we had a couple closes below 167.917, but it came right back to it. You see, it kept coming back to that line, It dipped down below it again, and then it took off. Right, it took back off, back up to the top of the range. Right, so you don't have to be in every trade. There was plenty of opportunities to be in different trades, but this is my trade that I did. So me being short, it came back up here and it took out my stop. Right, so now I'm at break even. No big deal. At that point, I should have looked for confirmation, which is right here. It happened again. And matter of fact, let's remove this one here. And we could actually remove quite a few of these. Because once I got out of my trade, once my trade was closed out with a 20 pip gain, I was at break even, right? So now right here we're looking, it it was like, oh nope, changed our mind. We're not gonna fulfill that again. My take profit was on a daily time frame. So here it is, Friday. I got in Wednesday. Friday is 3 days later. This is how you have to manage your expectations. This is why you have to trust your process. 3 days later, here it is. The day after I got stopped out, right? I got stopped out. So right here we had a break of structure, right? Then we had a confirmation. Yep, 169,413. That's our range. It came on back down. I had my confirmation. Boom. This would have been a best time to get into the market again and reposition myself for the same trade that I had earlier, right? The risk would have been similar. Well, let's look here. Got my confirmation right here, and let's say here. So see, that's like 100 pips. I would have had mine right here, right above here. So it's about 40 pips. I would have had a risk. So again, this being stopped out, I would have got stopped out again. So it doesn't always go the way you want to. However, we look for confirmation. And again, if I would have done it like this, it's another 70 pips right here. So my point in saying this is my original position back here on the 20th, where my reward would have been, and I didn't even take a look at that. Let's take a look at it now. My original reward would have been where we at? It'd been around, what did I say? It was 20 pips. It was 5-1. So it was over 100 pips. It was over 100 pips, right? So I'd have a 5-1. Here, it was another 5-1 at a little bit less. So I got 20-1. I mean, I got a 20 pip grab. Then this would have been another 80 pips. I would have had my 100 pips. See, this is what they call trading while managing risk, right? So a lot of people want those big moves. And like I said, like right here, we would have had a confirmation. My risk is 50 pips. We got a confirmation at about 60 pips. And that's on the 30-minute. Excuse me, that's on the hour. That's on the hour trading. So it doesn't even come back close to here until here. So I mean, I might have been able to look here. See, on the 30-minute, got our confirmation. But by that time that next 30-minute happened, it hit what my first take profit, right? So that's 3 days later, it hit my take profit. So these are the things where I say you have to trust your process. If indeed I wanted to take on a risk greater than 50 pips, my position size would have been different, right? And at that time, I could have taken on more than 50 pips. This is my process, so I would have been stopped out twice. However, I would have still have gotten my gains that I originally planned for, right? So most people would have tried to chase this, and this is where trusting your process come in. Most people would have chased this, right? When you're first starting out and you're looking like, oh, it's going towards my take profit. I need to get on here. Let me jump in here. This is the 30-minute. This happened in 30 minutes. Boom, 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 boom. 5. So you could have got in here, could have got in here, right here. Look, that's your take profit. However, you don't want to be in here, right? Because we saw that there was resistance right there, right? And sure enough, it went straight past that resistance. This is on a daily schedule. this on the daily candle, then my resistance is right there for my sell. It came right on past, and I guarantee if I put something right here, let me put a solid line here. Put something right here. That's on the 5 minute. We can go back and take a look and find some resistance on like probably even a 4 hour. So see right here, 4 hour, we got some kind of resistance right here, where a candle previously came to there and turned back around, right? So again, there's nothing like strange in your that happens in the market, right? We had some resistance right there previously, something further back left, and then we look right here. And if I look right here on the 4 hour, let's go down. Let's go down to maybe a 1 hour time frame. Let me take these off here. Boom. See, this is exactly what it is. So you see on the 1 hour time frame, I moved back left to October 13th, and we have our breaker structure right here where it supports the resistance coming down. And so it hit that resistance and came right back on up, right? And then we have our new lower low, right? So let's correct. So let's go back over here. We got a new lower low over here on our 4 hour. Boom. 1 hour back here. So with that being said, what I'm saying here is simply that now there's new imbalance in the market. So I'm looking here on the 1 hour. I see what? Boom. We get a break of structure. Boom. I look here for confirmation. I got another 100 pips on this move right here. I did not even have to be in this move from here all the way to here. That's about 400 pips. So within the week, I could have set myself up and took a greater risk with more pips and then took a different position size, and I would have got 400 pips. And I turned right back around and got 200 pips, half of that, which guess what? Let's take a look. Remember what I said initially? I was set up to take 180 pips. This is what I mean by managing your risk, and don't feel like you have to get it all, right? Don't feel like you have to get it all. So trust your process. I was set up to get 180 pips. I ended up with 200 pips for the week. So I still came out on the top side with no losses. Always manage your risk, and make sure when you go into a position that you understand what the parameters of that position is, right? So we talked about the range and how the 4 hour was trading between 169,420 and 167,917, and we knew that at that time, this is what we call sideways movements, or sideways movement in the market, or consolidation. And at that time, there was pips to be made during that time. You're seeing it's moving during that position. Even if you wanted to do a sell position or a buy position, there were pips to be made in that position. So with that being said, even if you took a bullish or a buy position, you would have had a nice little stop loss. Let's look probably right down here, right below here. You had stop loss below here, and again, there's pips to be made here. So that's about 140. It's about 140, 140, 150. So there's opportunities in the market if you understand your setup and set up your rules and play by your rules. Always develop your process and make sure you understand exactly what your process is and stick to it. Again, I trade and I'm still a full-time professional. I was still able to pull out last week 200 pips in a market where it was going quote unquote sideways or it was consolidating, and it still did the move that I looked at, and it was a high probability that it was going to fill that imbalance. So take your time, develop your process, make sure you understand what the market is doing when it is, and also set your expectations based off of your plan. My plan was based on a daily imbalance. So, of course, my thought is it's going to take several days for it to fill that imbalance. So, I probably should have taken, see, this is the lessons learned. I probably should have taken a bigger risk with my pips and had a smaller uh, entry, right? So instead of I don't know, however many you set your self up for your bundle, if I had a larger risk pip entry, like 60 pips or 70 pips, and took a smaller entry point, then I could have probably got that whole range. I don't know what the difference in cost or the reward would have been. I could have probably have managed to get the whole thing. Because if we take a look, that's what I'm saying. If we just take a look here, let me go here. Boom. So my risk was like right around here. If I would have took like an 80 pip risk and had a smaller entry, if I'd have took a 100 pip risk and had a smaller entry, I could have gotten all of this. At the same time, what's the point of setting yourself up to get all of this? Again, you develop a process. My process is 50 pips. I don't consistently adjust for the market, my risk, because I noticed that in British pound yen, and this is the reason why you have to know your trading tool. British pound yen, 50 pips is a good risk level. 50 pips can happen in, as you see, in 30 minutes, or it could take days to move 50 pips. So 50 pips is a good risk size for me, so that I'm not consistently being stopped out, not consistently being uh, uh, taken out of moves because of 50 pips. 50 pips is a nice size. As you saw, my initial one was 20 pips, and I was stopped out, right? So this is why you have to understand your market. And I said take a look at your market a little bit better and understand. Hey, when I'm going into a trade, I got to understand that my process is saying, hey, 60 pips is too small or too large for my trading tool. It might only be 10. It might be 100. So you have to understand your tool and be able to trade off of that. So again, I want to set you guys up for success by minimizing risk so that you guys can have generational wealth. Again, this is Christopher Campbell, C3 with the Investment Process Channel. Thank you for joining. Please hit that like button and subscribe if you like this content. And if you have any questions, please put in the comments below. I'm willing to answer anything. Have a great day.